Hello friends, welcome to another video. Today we are going to learn about the most scary candlestick pattern, the dark cloud cover. This is very similar to the bearish engulfing pattern and hardly you find any difference with that. If you don't know much about the bearish engulfing pattern, don't worry, I made a separate video on that topic. You just check this video from the I button or from the description. In this video, we are going to understand the conditions, market sentiments, and at last the trade setup with the practical stock. So watch this video till the end, and now let's get started. But before that, if you hear this voice for the first time, don't forget to press that red subscribe button and turn on the bell notification to get interesting finance and share market videos. The dark cloud cover pattern is also a two candlestick pattern, and it look like this. In a bearish engulfing pattern, the second red candle totally engulfs the previous green candle. But in dark cloud pattern, the second red candle engulfs between 50 to 100% of the previous green candle. Don't worry, you doesn't need any scale or ruler to measure this. Just try to validate this visually. Now let's move to the market sentiment behind this dark cloud pattern. Let's understand this with this chart. First, the prior trend should be uptrend. That means the bulls are in full control. When the first candle formed, it also confirmed the bulls are still active in the market. In the next day, the market opens high as expected. But from that point, the sellers get active and pushing the price lower. At the end of the day, the sellers are able to pull the price less than the half of the previous day's candle. So it signifies that the bears have become active and ready to take the price to the lower levels. Now let's move to the interesting part of this video, the trade setup. As long as the condition is satisfied, get ready to set up your trade. If you are a risk taker, then make a sell order at the closing price of the second green candle. But remember, if the second candle doesn't able to engulf the 50% of the first candle, then please don't make any trade. And our stop loss will be the high of the two candles. And if you want a more secure trade, then wait for the next day. And if the next day candle breaks the previous day's support, then make a trade. Otherwise, just avoid it. Now let's understand this with the practical stock. This is the daily chart for HCL Technology. Here, as you may notice, this is the dark cloud cover pattern. The HCL value for the green candle is this, and the HCL value for the red candle is this. As we clearly verify that the red candle engulfs more than the 50% of the green candle. So it satisfies our condition, and we are ready to set up our trade. So here we can make a sell order at around 613.46, means the closing price of the second red candle. And our stop loss will be the high, means 623.50. And if you want a more secure trade, then wait for the next day, and when the price come down below the 613 point, then only make a trade. And if it doesn't, just avoid the trade. So I hope now you got a clear idea about this bearish dark cloud cover pattern. If you still have any doubt, feel free to ask me in the comments. And in our upcoming video, we will learn about the different perspective to select a stock for the trade.
So don't forget to hit that red subscribe button and press that bell icon to get notified. If this video had any value to your life, hit that big fat like button and share this video to your family, friends and colleagues. Thank you so much for watching this video, guys.